Hi, everybody. This is Dave Levine with Trickle Research. Today we have Neal Voloshin. He's the CFO of Cavitation. And really, I think Neal also, he kind of wears a lot of hats there. So the CFO, but he's also in charge of shareholder relations and a lot of things. This is a really small company in terms of manpower, and it's really kind of a licensing story, which is probably important to keep in mind as we move forward and talk about the story a little bit. But at any rate, I wanted to give a little bit of background to my experience with cavitation. And then I kind of want to have Neal first talk a little bit about sort of how he got involved in the company and sort of that evolution that sort of brings us to today. So I started covering the stock in, I think, August of 2019. And part of the reason that I did that is I had seen Neal present at LD Micro prior to that. And interestingly enough, I had actually heard the story before, and it was about 10 years before that at a conference that I had held many, many years ago. And I remembered the story. And at the time, the company had just kind of entered into its agreement with De Smet Balestra. And I think, at that time, De Smet was really talking about a lot bigger numbers than maybe has transpired in terms of, putting Cavitation's reactors into largely the vegetable oil, edible oil space. And while I think it's fair to say that De Smet has been a good partner, it probably hasn't been as fruitful as they had wished, but at any rate, I followed the company for quite some time before we got to this point. And in that regard, I think it's important to note that maybe unlike many, or maybe even most microcap companies, certainly this company has a $10, $11 million market cap, so it's very small. But unlike a lot of microcap stories, I don't think, and Neal, you can weigh in on this, but I think the company hasn't created any dilution or sold any more shares since probably 2000, maybe 15 or 16, something around there. It's been 6 or 7 years. 2014. And largely because basically the agreement and the piece of business they carved out with De Smet, like I say, maybe not being as big a piece of business as they'd hoped. Neal can address that maybe. But I think big enough to sustain the company and not require them to go get dilution. And so I look at this as something where they have a great technology platform that I think Neal has come into the company and tried to position it in a way to take greater advantage of that platform. So, and we'll talk a little bit about some of the specifics of that. But Neal, can you just give us a little bit of background of how you got involved with the company and sort of the evolution of you going from what I think was an investor to being more involved in running the company on a day-to-day basis?
Certainly. I actually looked at the company, I think in around 2009 or 2010. And primary focus of the company at the time was they wanted to get into a space of producing biodiesel or transferification process. And, founders of the company, they've done a marvelous job really developing technology. Because, typically, microcaps, what do? You always have source of capital is really limited. They, two founders actually put a bunch of money in. If you can resonate with it, they actually mortgaged their own homes to get money or capital into the company to develop these technologies. It doesn't happen that often. Typically founders would come in and try to get as much cash as they can, sink the stock to nothing, and then just, it doesn't work, they run. Founders of the company actually did a pretty good job. When I joined the company again, I looked at it and I said, all right, what do we have? We have numerous applications that you guys are working on. And I think what you need is you need to have, need to bring a bit more management into the company. You need to have more capital into the company. That's what I did. I brought in approximately up to, I think, $800,000, $900,000 into the company over a period of about a year of my own capital. It's not that the company raised the capital all the time, but like with any micro cap, we've gone through these challenges that, for example, we had some really large companies that could visit the facility. What about 5,000 square foot facility? We've been in the same space for the last 11 years, and a lot of promises, and guys would do a lot of work here in the company. And then like sometimes things happen. Well, things did not evolve as fast. So when I came in, I basically said, all right, let's look at the lowest hanging fruit and let's just grab it. At the time, it was vegetable oil refining. So this is what the company focused on about 2012, 2013. We kind of put everything aside, which is, there were numerous applications that the company was working on. And we said, all right, let's monetize in the technology. That's our number one objective, because we've been in business for about 2-3 years. We just got to show that as great of technology that could be, that, revenues will start coming in. So this is our first engagement when we got involved with Desmet Balestra, and we've been working with them since 2012. They were our strategic partner, and I will elaborate a little bit further what our relationship was like. So working with Desmet, this was our first application, which is vegetable oil, chemical vegetable oil refining, edible oil. And like with any new technology, that new technology has to be brought into life. Even though it may be the best thing since sliced bread, people are apprehensive. In particular, in the conservative industry, like agriculture, people that work at these plants, they probably work there all their life. So just because you bring new technology and you kind of claim that, oh well, it's just a better place and we can do all these wonderful things, it's not that simple. Even though we truly believe that, at the time, that it really fundamentally changes the way the industry is operating. So it was a learning curve for us in Desmet, which took about several years, but then slowly, Desmet slowly started upselling technology. It was incorporated into a much larger system, but to conceptually understand how the process works, if you consider any plant, consider whether it's vegetable oil refining or oil refinery or water processing business, doesn't really matter. Our technology is very compact. It's very easily can be integrated. For example, shutdown time may be like 24 hours. So we are not really changing the way the end user is operating. We're just making it more efficient, more cost effective, and reduce usage of chemicals in a pretty large scale. So if we can consider think about it, it's like a car. The car is running what it does. And we've developed this wonderful engine that the car is going to have these much better efficiencies. That's what we are. We are the engine to a vehicle. We're not a car manufacturer. We don't want to be a car manufacturer, but we bring this technology just to make it a better place and a better or efficient place, for the entire process. So that's how we got involved in the company. We've signed several contracts. We signed one with Desmet Balestra, and it was the first 3-year term. Then what is another 3-year term, and right after that, we just signed the most recent one in 2018. It's another 3-year term with Desmet. So during the period of time, Desmet is paying our company a licensing fee of approximately $600,000 per year. And obviously, once we upsell, we generate more revenue, through Desmet and based on the contract that we currently have. We also had a contract with a company out of Germany. By the way, Desmet is based out of Belgium, and they're a worldwide company. They're present pretty much everywhere. We also had a contract with GIA Group, based out of Germany. Same thing, global company. The contract with them was for about 3 years. I think they were just really good partner. Unfortunately, we weren't able to execute on our business model in terms of monetizing on the technology as well. We're still in close relationship with GIA, but our contract ended in, I believe, if I'm not mistaken, last year in 2020. We work on a fiscal year because we go from July 1 through June 30th. So I think in our fiscal 2020, that's how our contract ended. So, during period of time, as I did mention in the past, that our last capital raise was in 2014. Since then, I think we issued maybe 3 or 4 million shares. So our cap structure pretty much remained the same. We do not have any toxic debt. We did not participate in any convertible debt. We have a PPP loan, which is roughly, I think, $100,000, but I think any company today does have it. And we're very clean company in terms from perspective of, again, capital structure, where we are. We're not floating in debt, and we're generating cash flow. As of up to date, primarily we stayed cash flow positive. That basically our trademark. Obviously, we in the last several years considered to grow business much greater, but as far as the relationship where we are as a company, that's basically what it is.
Okay, so you've kind of had two major events in the last couple of months that have been topical. One of them was the restarting of your operations or your partner's operations, really, in the Permian Basin. And then a new relationship that you announced the other day with Partnership International. And I want to cover each of those just a little bit. So I'm going to start with the Permian Basin. And you may have to fill in some holes here if I miss something.
Sure.
But basically, when I started covering the company, one of the reasons I did is because you were emerging into this relationship in the Permian Basin where where your partner, who is a water treatment company in the Permian, had collaborated and found a way to use your reactor to treat produced water in the Permian Basin. And produced water is a sort of the one, nasty results of fracking. And there's a lot of it that gets produced, and so a lot of it that has to get cleaned. And when I first started the coverage, you had just entered into that, and we sort of anticipated that you were going to put your partner basically was going to put more reactors in the field as we kind of went through 2020. And of course, when we got to the first part of 2020, we had two major events, one being the pandemic and the other, the drop in oil prices, however related those might have been to one or the other. But basically things in the Permian Basin, as well as around the country, just kind of stopped.
Right.
We were really anticipating some pretty good numbers from that. And can't change that, obviously, but it looks now, obviously, we have better oil prices. I think it's fair to say that things are starting to pick up in the Permian Basin. And our expectation is that you're going to kind of maybe leave off or pick up where you sort of left off, or we expected you to gain traction at the beginning of 2020, sort of fast forward, forget the last year, and that's sort of where I feel like we're at. So can you provide a little bit of color on where you see your opportunities in the Permian? And then I'm gonna add a little bit of color to some of the numbers you've provided in terms of to the street in terms of the Permian operation.
Yeah, sure. Over a period of time, again, we got to go back to about 2016, give or take. We started developing additional technologies because primarily our technology, which we called, our nanoreactors, they operate under fairly high pressure, anywhere between 900 psi to size about 1100 psi. So obviously, components that come along with it, pumps, motors, and so on, relatively expensive. So we figured, why don't we try and figure out perhaps we can emulate the process, but let's say redesign some of our reactors so that can operate maybe between 150 and 300 psi. That will reduce just the operational costs, and let's see if we can, provide the efficiencies that our high pressure systems, do today. So that process started in about 2014, 15, give or take. By about 2016, our first reactors, we call them LPNs, which is low pressure nano, started to come out. So obviously it required testing. We had to go through quite a bit of work on that. And probably around, again, 16, 17, if I recall it correctly, the first prototype, commercial prototype, has become available. So we figured, what are the opportunities for our LPNs? One of the applications that we're hoping to achieve good results were treating water. Water, I mean, I'm not going to elaborate on that, but everybody knows what water is. I mean, everybody needs water. Everybody wants to treat water right, use less chemicals. Fresh water. So many countries are looking to get or create systems that can provide that opportunity or have fresh water available to people living in the country. So our first thing or our first application came in really, how do we treat produced water? And it may come, again, it could be related to oil and gas. It could be some other areas that technology may provide great efficiency. So what led us to believe that we could be successful in that is because of a natural process that our technology does. By creating high and low pressures, we break fluids, nanoparticles. The reaction time of whatever we want to achieve becomes exponentially faster and more efficient. So when we look, for example, at treating frac water, which I don't know if you probably have seen it, right? It's just dark as tar. I mean, it has the sulfur smell presence and so on, and it has to come out to become somewhat crystal clear. How do you treat it? And we studied the process. We figured out what other companies do, and we said, all right, let's give it a shot. We've brought in fairly large volumes of frac water from Permian Basin, and we started we started doing the testing in our shop. The results were quite interesting because pretty much without usage of chemicals and, again, fine-tuning the process, we were able to achieve the water that was crystal clear. When we ran the analytics or lab analysis, we could clearly see that the components that vast majority of water treatment companies tried to get rid of, I mean, we basically passed the smell test. In essence, the results were really, really good, like concerning with BOD, for example, and reduction of some other unwanted chemicals. So at the time, we had a gentleman who actually called us and said, well, listen, I'm an operator in Permian Basin. I read about your technology. I've been in this business for about, I think, if I recall correctly, about 20 years. I'm really intrigued. Why don't we start working jointly? We've gone through the route, and sometimes we're a bit more apprehensive, and say, all right, where is it going to lead us to? This time around, I don't know how it was. I mean, the gentleman really sounded so genuinely and knew what he was talking about. I said, all right, let's give it a shot. So obviously, we had numerous meetings. We flew down to see what operations are like. And over a period of, several months, we figured out this could be a really, really interesting partnership for us. So we created a joint venture company. We named it Environmental Water Tech LLC. And in the joint venture, we basically said, all right, let's bring in our technology. Let's license it to this JV, this LLC, and let's see how it's going to evolve. And we started now doing commercial testing. Obviously, what you do in your backyard, I mean, it's great, but still, it's a batch process. So, okay, we treat maybe, I don't know, 100 barrels of produced water. Well, you need to start, treating 100 barrels per minute. So, the scale changes quite a bit, or 200 barrels per minute. So moving from a batch process to a flow-through process is not as simple as 1, 2, 3. So we started working on the process as well, and it took us, give or take, about a year. By the time, we had to figure out all the tiny little things of what has to happen. And by that time, in 2019, again, we created Enviro Water Tech, started building our first commercial unit. It came into production middle of 19, and by the end of 2019, we clearly saw that the opportunity is there just because of what technology has done as part of the entire system that's been incorporated to in terms of treating produced water or frac water. At that point, late 2019, early 2020, we really had a pretty ambitious plans to, through a joint venture, build anywhere from 6 to 8 mobile units that are going to come in treating the produced water. And that's where we started the process. And then, of course, February, March of 2020, everything came to a screeching halt. Again, like you said, for various reasons. It was COVID. Also, the oil and gas industry has collapsed because of pricing and demand. So it took about almost a year for the industry to start recovering. And what we're seeing today, price of oil, so many producers either put their production on hold or have not reopened yet. But the ones that are coming back clearly need our technology, because now the cost base becoming even more essential because of the economies of scale. So we truly believe that our mobile technology can significantly reduce the cost basis for the operator to treat, the produced water. The first mobile unit is on, as we speak, came online. Like everything, it requires a little bit of fine tuning. It's not like, again, it's never plug and play, even though it, looks okay, it operates okay. So it's a little bit of a learning curve. We need to do a little bit of fine tuning. The weather in Permian Basin has stabilized about 50 degrees, give or take. And second mobile unit is being built as we speak. Should be completed by the end of this month. And we're anticipating the second mobile unit should come online in April. Just to give you differentiation, that our first stationary unit that we built in 2019 can handle approximately 200,000 barrels. 200 barrels per minute. 200 barrels per minute. The new mobile units are going to be able to handle 500 barrels per minute to as high as 1,000 barrels per minute. So we actually are expanding on the ability to treat the volume of produced water. So that is not only that the question becomes that the efficiency of treating the produced water, but also the volumes that we can treat have become significantly larger. So in essence, that's where we are today on the produced water treatment side.
So I want to put this into perspective for people. So the announcement you put out yesterday referenced that that a single mobile unit you anticipated would produce about 500,000 barrels, would clean about 500,000 barrels.
Correct.
Okay. So to put that into perspective for people, if my math's right, that translates to about $25,000 per month under the current.
Right. On the cash flow basis, it produces, again, maybe there is a little bit of a downtime, maybe slightly smaller capacity or larger production could be, because like I said, we can expand it. And that's, again, the beauty of the technology, because it is very compact. We can always do an add-on to an existing process. So we anticipate our cash flow on that could range between $20,000 to $30,000 per month.
Okay, so that's about $300,000 a year. Okay.
Correct.
So to put that into perspective, you said originally that you had planned on putting 6 to 8 mobile units in the field, and if I do the math, hypothetically, if you had 10 units in the field and they were generating that kind of cash flow, that's somewhere around $3.6 million a year in cash flow to the company. Now, remember, this company has an entire market cap of $11 million, and it's largely a license. So the margin is almost complete. So this is the reason why I keep pounding the table about cavitation, because as they enter this opportunity in the Permian Basin, if they can go get 6, 8, 10 of these reactors in the field and working and producing, that's a watershed event, no pun intended, a watershed event for this company from a financial perspective. And you're really talking about cash flow that's equal to a third of the entire market cap of the stock today. So, and to put that into further perspective, I don't know what all the numbers are in the Permian now, or where they're gonna be in terms of production in 6 months or 12 months from now. But if you go back to our initial research, what we had kind of indicated there was that production in the Permian of produced water was estimated at somewhere between 15 and 20 million barrels a day. So for them to go put 10 reactors in the field, at that sort of rate, they'd be producing, they'd be cleaning up less than 1% of the produced oil.
Right. That's about right. And
So,
remember, last year, not 20, in 2019, it was almost 60 million barrels. 60.
yeah.
You know,
So yeah, there's 60 million barrels produced
Right.
across the U.S. Estimates are a third of
right,
it.
right.
And that may be a bigger. I don't know that anybody really knows that number, but you know, as a point of reference, we're talking about you cleaning a small fraction of the produced water.
Correct.
So I think that's sort of my attraction to the story is you've gone from this sort of legacy business that's paid the bills. Now we've added this piece in the Permian on, and that takes us to the next discussion announcement you made the other day regarding your relationship with Partners International, which I think is really about them helping you maybe develop some other applications or identify other applications, help you get or acquire funding for those, normally through non-dilutive means, government grants or whatever, and then to help you maybe take those applications and commercialize them. So can you just briefly give us an overview of the Partnership International and why that's important to the company?
Yes, sure. Partnership International is based in Washington, D.C. And some of the applications of our technology if we can get certain, government grants, it's a really big deal because, for example, we're looking at an application of treating ballast water. It may require a substantial amount of money. If we could provide the technology could be successful in treating ballast water, the opportunity is endless because governments worldwide clearly are looking for the companies or technologies that can do water treatment or ballast water treatment in a very environmentally friendly way. Remember, for the most part, our technology or processes do not require usage of chemicals, or the usage of chemicals is substantially reduced versus the conventional methods and conventional process. So in order to do that, we feel that with Partnership International, it gives us a really good entrance to the door working with government agencies, because it's a process. It requires, the application. It requires how it is being presented. Once we, obtain the grant, again, you go through layers. You need to, it's just not a process of handling it, within like 24 hours or just, a week. So we find that Partnership International is really, really important element to developing our additional technologies and applications in other areas of treating water. And we find that this at least we're looking at this relationship as that could really provide great opportunities for our company. And they're great people. I've met them in Washington, D.C. They're just great people. Easy to work with.
So basically, I guess the way I look at it is that again, we're starting to get, and I realize, we thought we had good visibility with the opportunity in frac water beginning at 2000. The world changed a lot for everybody, so maybe that visibility wasn't as good as we thought, but then I'm not sure that anybody really saw that coming. So, but now I think it's fair to say we have reasonable visibility or improving visibility, certainly on the frac water opportunity. And I think I think it's fair to say that opportunity is going to provide a catalyst to the operations of the company on a relative basis that is going to produce probably a calendar year that should be, I think, the best calendar year you've ever had, and should make you certainly more profitable than you've ever been. But I think that in addition to that, we have these things that are lined up, the potential for things from Partnership International that I think could create an additional valuation leg in the stock or in the company. So I look at it from where the market cap's at right now, and I think the story is really quite open-ended in terms of your opportunities. And those opportunities are starting to become more visible, and we're really starting to be able to get our arms around what some of those numbers are. So, Neal, I guess just to kind of wrap it up, is there anything else you'd sort of like to add? I know that we've talked about some other applications of the technology, even in the consumer goods space and some of those things. I mean, anything else you'd like to add before we wrap it up?
Again, on the water treatment side, as I mentioned, we worked on treating fracked or produced water in the oil and gas industry. We're looking at the opportunities in water treatment right now that would relate to ballast water treatment, remediation of agricultural water, perhaps renewable fuels, such as mixing water with hydrocarbons and vegetable oil and create an emulsion that does not separate for a certain period of time, that perhaps can be used as the energy source. There's several other applications that we're clearly looking at to implement as well. So, company as a whole,
how about desalination?
Primarily
desalinization?
Desal, the same thing. We're looking to do it with desal as well. And like you've mentioned, as a company as a whole, we have to stay focused because we're still a relatively small company. We develop technologies and then we bring integrators or strategic partners to, again, implement our technology in the real life. And we feel that for our company, probably it is a good choice instead of building a vertical infrastructure and hire a lot of people and do the expanse and so on and so forth. And still going to take us quite a bit of time. We'd rather go with somebody who's been in that business and clearly understand it and integrate it on much faster scale. So not much is going to change on that. And like I said, our primary focus today and what we've discussed is water treatment. Have some legacy technologies that we're still value and we clearly operate with that. And we perhaps discuss some other time how those areas do evolve because we're just not stationary. But primarily, yeah, that's where we are today. I mean, can't comment on our market cap or where the stock is. I mean, market dictates whatever it does. But generally speaking,
that's my job.
As a company, yeah. Yeah, as a company, we clearly grow.
Yeah, so I feel like the next 9, 12, 18 months in the company are going to be transformational. I think there's certainly the potential for that, and as we move forward, we'll I'll obviously keep track of it from a research perspective and keep people informed that way. But as we kind of move forward and maybe make some more progress, would like to have you back and do another one of these and just maybe update people where we're at. But again, I really feel I'm really constructive on the company, and I feel like you're in a good spot here. And I feel like the next few months are going to get, we're going to create some visibility and going to be a lot better. So, like I say,
I hope so as well, Dave.
Yeah, I appreciate you being here, Neal, and we'll see if we can't get you back, when it's appropriate.
Great, Dave. Thanks very much. Look forward to it.
Great. Thanks, Neal.